Hello traders and welcome to another video review. Today is Thursday, June 8, 2023. Let's take a look at the Forex economic calendar today. As you can see, the most important data releases today are GDP data from Japan, released already overnight. This GDP data were for the first quarter and surprised the market participants because the actual reading was 0.7%, forecast was 0.4%, the previous reading was 0. So very nice data from the Japan. We will definitely take a look at the Japanese yen currency later on. Interest rate decision from this is interest rate decision from India, of course. The Reserve Bank of India kept the interest rate at 6.5%, no surprise here. Initial jobless claims are scheduled for release at 2:30. Those are very important data from the US, and the market participants expect a tiny jump to the upside from 232,000 to 235,000. So those are the data for Thursday, the most important data for Thursday. Most likely these data are market movers, so please stay focused and stay vigilant. Now let's jump to the first technical analysis chart, and we are going to take a look at the US dollar to the Japanese yen. US dollar to the Japanese yen for our chart is showing us a period of the consolidation. The market has been stuck between the levels of 140.46 and 139.04. The other technical support is located at the level of 138.46, which is way below the key moving average. As you can see, this moving average is a 100 periods moving average. On the other hand, the 50 periods moving average is keeping a lid on any bullish attempts to rally. The key technical resistance is of course located at the swing high. The swing high is located at 140.93. So as long as we are not trading above this this level, the outlook remains a little bit neutral. In the background, we have a very nice up movement, as you can see here. So the higher time frame trend remains up. Okay, so the outlook in the larger time frames is still bullish. However, for now, we have some kind of a pause in the market, in the bullish developments, as the market is trading horizontally. Let me just take a look at the RSI. RSI is bouncing up and down around the neutral level of 50, as you can see. So there is nothing more to add here. And as you can see, the bulls are still winning because they are trying to bounce higher every time the market goes down. However, this situation here, this cycle here to the downside, might be just a part of the bigger correction. So please be prepared for any test of the recent lows or even this 100 periods moving average. Let's find out what is going on the different markets related to the Japanese yen. For example, euro to the yen. In that situation, the euro to the yen is still looking pretty horizontal. There's of course still the possibility that the market will start to move in some kind of a direction, but the GDP data didn't trigger actually any kind of a big movement on the for our chart of the euro to the Japanese yen. As you can see, we are still below the short-term technical resistance at 150.14, and we are trading just above this technical support located at 148.50. For the key technical support, of course, is still located on the chart, but it's way below the current levels, 146.08. So the outlook is almost the same as in the US dollar to Japanese yen. We got this big move to the downside, and now we are locked inside of the some sort of the horizontal range. Momentum is again neutral, more likely bouncing from the level of 40, then it's going to the 60, then it's going down again. So it's not even going higher towards the extremely overbought or oversold market conditions. So the market participants do not know which way they want to go. They are waiting for the trigger to help them to move in either direction. In the background, on the euro yen, there is an uptrend, but it's not that strong as on the US dollar to the Japanese yen. So this market might be not that susceptible for any fundamental triggers. And the last market we are going to take a look at is the British pound to Japanese yen. This situation is very, very similar to the US dollar to Japanese yen. Big, nice uptrend. It's like a more than, I guess, there you go, more than, this uptrend is more than, yeah, it's half year or even more. So it's a nice big uptrend. Market still continues this uptrend. There is no indication of any sort of the uptrend termination or reversal. We got the technical support at 172.50 and the other located at 172.66 technical support, intraday technical support. The recent high and the recent swing high was made 6 days ago at the level of 174.65. So we still relate to this high. Nevertheless, please take a look here. Let me just zoom in. Please take a look here. This high was made when this high at 174.65 was made during the sell-off as well. So we got this kind of a spin bar, kind of a shooting starish spin bar, and since then we went down towards the nearest technical support. Apparently, if you want to add one more line, you can clearly see that this technical support has been tested before. So we got like a very nice demand zone here between the levels of 170 to 50, 170 to 76. Okay, there was a bounce, but the bounce after the high was made, yeah, there was a bounce never went above the swing high. We stopped at 174.40 and the market still trying to move again higher above the last swing high. Momentum is positive, maybe not that strong, but it's positive. It's on the positive territory. Nevertheless, you need to take a look at this situation here. The market is trending, okay, it's in an uptrend. However, you can clearly see the divergence between the momentum and, of course, let me just put the arrow here, and of course the market making all new highs. Okay, so we got clear bearish divergence. Maybe this divergence will trigger some bigger corrections on this market. However, we need to break below the demand zone if we want to trigger bigger correction. Okay, for now the outlook is still bullish, but it's not that strong. It can, this level would likely be tested. Maybe some marginal new high is made, and then again we should go back to the range. So because of this decreasing momentum and the bearish divergence present on the chart of the British pound to Japanese yen right now. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.